Good night. It is July 31st, 2026, and it's a Friday, and it is midnight, and settlement is 7473. Been a while since we've talked. I can't really remember the last time we talked. I did not check before I rolled. Um, but pretty much since whenever that last report was, the main idea was still June low, and as of now, it is still not tagged. Obviously, the all-time high here. I'm counting this May high as the all-time high, not the actual all-time high. I'm treating this as the all-time high because I'm essentially treating that all-time high as the top for now. And that really depends on the three-headed bubble. The three-headed bubble, as we all know, is AI, foreign relations, and inflation. I believe. Yes, that's the three-headed bubble, as far as I'm aware. Um, I'll have to remind myself again what that was. But that's essentially what it was: AI, foreign policy, and inflation. That's the big-headed bubble that we have. Actually, no, it's the jobs. I think it's the jobs. Inflation is jobs. Yeah, it's the jobs. Jobs. Jobs is a big old bubble. Um, So yeah, we've been just been going chopping and chopping around this range. So it's been very difficult for even an intermediate to properly trade this market. It's just not the best conditions. So because these are not the best, these are great conditions to learn, but this is not the best conditions to try and extract money from. So that's why data is delayed. I'm just not trading really. I'm just keeping up with what the price of SPX is and trying to figure out okay, where's the buying opportunities essentially. And before we rolled, all throughout you know, always calling stuff out in the chat, always calling out the narrative in chat. This was a buying opportunity. This was a buying opportunity, and our June low buying opportunity is still on the table. Um, so yeah, you could pretty much just treat. Yeah, this was the quarter low technically here as of July because it was the July low before it was passed, before it was tagged. And so with tomorrow's price action, this is probably we could just move that now. This is going to be July's low now. So yeah, we would like to see at this point July and June's low taken. Now, when I say taken, I don't mean buy. Because right now this is still 50-50. In terms of the 20-day, right now we're in a premium. I'll even show you just so you know. We're in a premium in the 20-day. So we could chop tomorrow, like nothing could happen tomorrow, and Monday could be a gap lower that takes all of this out. I don't see any other news happening that could bring us back, that could gap us lower. But the thing is that even though this was the open of the contract, there was some gap opens every now and then. Like for this one, this was a gap. This wasn't a gap. This wasn't a gap. This wasn't. This was a gap. Not a crazy gap, but this is a gap that shows that they have a willingness to sell. They take this high here. This is the week before, preceding week's high. Take that here. Take it on Thursday of all days. Look at that. Just look at how they treat things. So Monday they gap lower, sell everything, rebalance, take the high, and then deliver lower. Slight gap here, but you do sell, go back up, take that high, take Monday's high, which would be the week's high, at Wednesday, deliver Thursday, and then nothing Friday. Same thing here, gap up to sell, but you can't really trade this week because Wednesday was Unk Day, so there wasn't really, you can't really trade that. Um, so yeah, no rate change. Everybody takes out that low here, or I think it was this. Yeah, everyone takes out this low here. Thursday they buy up, and right now we're really just trying to. You may or may not want to trade going into tomorrow morning, this morning actually, as of now. But yeah, that's what it's feeling like now. It's tomorrow's feeling like a little bit of chop, so we'll have a better narrative. Monday, Tuesday. We'll definitely have a better narrative by the end of Monday, and we'll see what ends up happening. In terms of my own price reading, none of the rules really have changed. It's just the way that I have looked at them may have slightly changed. Been doing research, as I will call it, and essentially the market, statistically and academically speaking, the market is either doing two things: mean reversion or trending. It's either one of the two. So I don't think I have the mental energy to go through how I've been seeing things since that realization. It's either trend or mean reversion, not chop, mean reversion. That's a Those are two different things. Chop and mean reversion are two different things. Um, but yeah, like for example, today here's 9:30. Buy up. You think this is a trending market. Say you go into this session as a trending market. You're cleared here. You're not selling. You're buying, right? So you could blind buy 9:45, but you get stopped out. And then here's the better trade, session low. Here's 10:45, so you're cleared to trade here. So all you would do is put a sell limit here. That's pretty much nothing, not even close to 20 ticks. Obviously, that's 20 ticks right there. Here's your 80. That's a good, it's actually 160 before you even touch the session high back up there. So you could stay for a good. From here to settlement is like 290. So you could put 300 for 75 points. That's a good 75-point trade. I was doing too much, and obviously I'm not trading, so that's something I like peeked at and didn't take seriously, and then to see it happen was pretty cool. Here's Ankh. Ankh was essentially slam. 3 p.m. slam. Just there's no analysis or trading that you could really muster up to or come up with to justify why that is, like, the justification is 8 a.m. open. Where's 8:30? There's even 8:30 here too. So those are your two justifications to put a trade here, but you get absolutely destroyed if you go for 8:30. If you go for 8:30 open, and if you go for 8 o'clock, that's a really really good tick high type. And then this breaker, order block, whatever you want to call it, it's just price. Take it here. It takes all of it actually. Let me see how much it takes. How much? Let's go deep to see how much it takes. Let's see if it takes all of it. It should take all of it. It looks like it's taking all of it. It did take all of it. That kind of thing. So you would have to trust that when Ankh is speaking, that they're not going to pass this. And you would essentially have to sell at 3 p.m. And the drawdown you would have to deal with is not bad. It's not 40. That will be your stop loss, and 80 is above that stop loss. That's not a bad blind slam trade if you are anticipating that slam. So it's not bad. It's really not bad. But it's just no real justification in real time to say, okay, that's definitely what's happening above a 80% chance that you think that's going to happen. This is totally 50-50. So yeah. Something like this too. Classic This is an example of mean reversion right here. By the way, they sell off here, leave this lower day here, and also leave this lower day, this previous day's low here. It does not take out the daily low, that day low, but it takes out the lower day. So you could have put 1 or 2 here and saw what, look to see what would happen. You get your 160 well before that high is taken. This is a Monday trade with a gap up. You don't remember the rules. You don't trade Monday. You're not supposed to trade Monday. And Monday is literally a 7 a.m. open slant. Swoop. There's your 8:30. That's your trade right there, actually. If you take that, let's look at this real quick. Got this fair value gap here. Type. Here's your 8:30. You want to see 8:30 if you're bearish. You want to see this ran. At minimum, you can't really buy this because number one, it's Monday. And number two, this big old gap is there, so you don't. There's many reasons to say don't sell here, but the very fact that 7 a.m. opens like that leaves this fair value gap here. That's a straight up trade, and as well, obviously, if you just did the hey, we're just gonna do the 8 o'clock hourly open sell limit, not even 20 ticks. Here's 40 ticks up here, and 80 ticks is well above there. Very good trade. If you take that is like 300. It's definitely 380 ticks, 80 points. Sorry, 200 ticks, 300 ticks. Essentially, that's a 300 tick trade. You would have to be up at 8 o'clock to do that. So yeah, hit the gym, be at the charts at 7. That's how I used to do it, but I don't like getting up at 7, so I just skip out on 7. But that's a very good trending day. That's a trend day. Yeah, and then for this is also a mean reversion trend back up. When I say mean reversion, what I mean is that on the daily, on the higher time frame, what the market wants to do is go back to discount or premium. In this case, it goes back to premium, sells off for the weekend, comes back up, and then goes right back down to trending. Mean reversion. And they mean revert from the lower day. Right here, that's 9:45. Look at that. 9:40, perfect trade. 9:45 right here. Whether an hour's worth of choppy, you got to really trust that this is what it's going to be. If you're just scalping, then hey, you're just scalping. And you would have to scalp the 10 a.m. open down here. Fight tick trade, but yeah, trend. What is the day doing? Is it trending or is it mean reverting? It's either one of the two. You have to know if it's trending or mean reverting, because today could have been some sort of this could be a shift. I don't know, but just looking at the visible, like, theoretical trend line, looking at the 20-day, it could be. It could be that, like I said at the beginning, that we could just be mean reverting up here, chopping up into this discount to then go lower and past these lows. So yeah, you could get your, and not financial advice, do your own research. These could be good buying opportunities, but you have to take it. You have to, number one, take it, and number two, figure out where you want to cut. Cutting would be a close under. I'll put that down as well, so that way you can see it. But essentially, a close below May low should a significant close below May low should make you think that we're going to hit these lows, and then any other lows that are past that. So if we do go into some booga 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 booga, it would be the year low, I believe, right? Yes, yeah. If we go into a booga 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 booga, it's just a year low, essentially. Let's read the daily volume. We are not added on SPX. We are not added on the Awanda contract. We are not added on the current contract, and obviously the continuous, micros, and SPY. So yeah, this low here, 7. You could just do 715 because that's also May low. That's for the that call out is for the people who that call out is for all the what you call it. What's that derivative called? What's that derivative? Options. Yeah. Options traders 715. That's what you should look at as some sort of call opportunity that you could leap for a year. Or you could just put now and just see what happens. Those are your two options right now. So yeah, I'm just gonna peek at Nas and read the price action. Y'all know me; I don't trade Nas. I know everyone's favorite. It's everyone's favorite contract and market to trade. It's too fast for me. Don't like the price action. Like for example, like I think ICT even called this one out. Here's 930, that low. Yeah. This low here, that low high here. Chop around here, 3, 4, 5. Supposed to be cleared to trade here, right? But you done already missed the move, and now you have to jump into that. That's why I don't like trading futures. Not my cup of tea. Not my cup of tea. Let's even go to Tuesday, which was a mean reversion day for me. What is it doing? Here's 930. That's the lower day. I cannot put a limit order down there. I would get wrecked if I did that limit order. That's why I don't trade in Q. Let's clear ourselves for the session. Right? There it is. You cleared here at 9:45. Where are you finding a trade? I'll tell you exactly where you could find a trade. Right here at 10:15. This low, but even this low. Actually, yeah. This is a peak perfect trade, actually. Right at 10:15. Right at 10:15, you could soup that and you catch the bottom. You gotta be focused and you gotta be willing to know that this could be a mean reversion. Like, yes, this all looks like, something that could go even lower, but this is not what they want to do. They want to take out this liquidity here, finally bounce off of this because there's no willingness to go lower here, and then go back up to the high, past the high of the session. Past 7 a.m. They go past here, target, and that's pretty much your trade. That's why I don't trade in Q. Not my cup of tea. But if it's something for you, it's something for you. I probably have to change my model a little bit just to be there, just to understand NQ better. But I just don't want to. Now let's look at the DAX. Let's just take a peek at the DAX because we do need to at least have an idea of where we are and what's going on, right? It's been the 1990s, and we've been trying to find our way up. I guess because of inflation, this is precisely why we're in a bubble. Because the dollar is kind of getting a little weird. The dollar's getting a little weird. June is added volume, so we should be going up and inverting. Oh no, we don't already filled that. So this monthly fair value gap here would be next. On the daily, you got all of this on Unk Day, so that is something. The opposing side of that would be this fair value gap, and then here's the June low down here, and then this would be the quarter low down here at around 97. So $97 could be the next bull opportunity. Crypto. Now, I've been seeing a good stuff of this. I think last time we spoke, we were looking at the October 2024 low and 60,000. Primarily, we've been chopping around. Still, I still can't remember the last time I did a report, but we've been chopping around this, and what I see happening is that we take this high here. It's not the June high. June's high is up here, but we take this high here and then fill some of this fair value gap here and here, maybe here. I don't know. I can't stay for certain here. But this me, Bitcoin, just buy, hold, and don't even worry about it. Just let them do whatever they want to do. But this October 24 low really does look like a floor that could be flushed at some point. So yeah, things don't look all that good for tomorrow. They have this candle here with added volume that could be flushed, and this. Oh, see what I'm saying? That's Monday. That looks like it's gonna go past this low. That looks like a setup that it's gonna go past this low. So all that to say, to go right back here, back to the ES, this is 50-50 looking bearish. I still recommend, not financial advice, do your own research. I still recommend having some sort of position down here ready to rock and roll at the May, June, July low. Like, I think you should have those ready to rock and roll, like some positions here, or positions now. But I don't know, man. Something just doesn't smell right. Something just doesn't smell right. So I think it would be best to just have a position down here at 7256. In this case, in SPY's case, since I know this is mostly for options. 715 would be a good buy level to see if that's what's going to happen. You can't say for sure that that's what's going to happen, but that's what these lows down here is what could happen between 716 and 713. Those are the lows that could be tagged and held. So these June's low is still my main point of attention. So that's still what I want to see. All this rolling. I don't know how long I've been rolling, but all this rolling to say 25 minutes. All of this rolling to say that these lows down here are still what I want to see from a bullish perspective. From a bearish perspective, I want these lows to be completely flushed. So yeah, who knows what we will see Monday? It's probably NFP next week. Yeah, GDP today. No, all good. Nah. Jolts on Tuesday. No. NFP is next Friday. Why is that 7:30? The time must be all messed up. Yeah, the time here is messed up. But let me just go through the month. August 12th is CPI, and then PPI the next day. Yeah, I don't see anything. So we would for a really booga wooga wooga wooga. Oh yeah, Jackson Hole Symposium at the end of the month. By the way, that should be noted. Um, yeah, I think the only thing that's gonna send us into booga wooga wooga territory is something in AI, something overseas, and something in the job market. Like, no, like, this administration is still probably not telling the truth about the real job numbers, so it is what it is. I'm trying to figure out when the next rate is. That's really what I care about. It's probably going to be at the end of the month. Nope, its next rate will be September 16th. That's the next rate. So we'll have Jackson Symposium at the end of the month to hold us over with some bullshit. But yeah, 50-50 bearish. Really want to see these levels held as a bull. So yeah, we'll see how this plays out. All right. We have a blessed day.